It's May the 30th, last day of the week, last day of the month, and I'd like to recap a trade recommendation made in the Treasury note at 6:45 Central this morning. We started out hoping to sell against 20. 19's better. We said it may take a 15 to get off a short, and that came from the overnight session high at 17.5. 15 is a 30-second inside of a round market number, 16, and quite often that is resistance just because it's 16. So we wanted to be sellers this morning. We wanted to buy into weakness. We didn't think we could break the market. We thought we'd be a little lower, but the market would hold. And we wanted to buy the 8 to 12 area, and especially 125.05. That would be leaning against a breakout from 125.04 in the move that took the market up to, I believe, 126.20 basis the June contract. So the market opens. We get our first shot up here. We've got a square and a diamond. The software tells you when the buying is dried up, and you could have been short at 15. Market's first rotation down stops at 12. Next rotation up stops at 14.5. So you could have been short at 13. And eventually the market trades down to 7. So 13 to 7 would have given you a shot at 5.5, 30 seconds. And 15 down to 7 would have given you a shot at 7.5, 30 seconds. So that's a pretty nice trade for that day. A V-top buy coming off this, a V-bottom buy coming here would have had you long at 9. The retest failure, that market took you all the way back up to 14. That's a trade you could have missed, though, if you hadn't been prepared to buy a V-bottom. The retest failure that came in the 11-12 area right here, the market eventually did trade to 17. So a mean green trade right here would have had you long at 12.5, and you could have taken yourself out as high as 16.5. So you had a shot at 4.5, 30 seconds on this trade. You had a shot at 5.5 to 7.5, 30 seconds on the first trade of the day. And there was a trade in the interim in here. You could have been long from 9 to 14, but we won't count that trade because a lot of people will not trade V-bottoms in this contract. So the minimum expectation for any trade is 230 seconds. So there's 2 trades here at 230 seconds apiece. The minimum you should have expected today was 430 seconds. And the best you could have done was 7.5 plus 4.5, which would have taken you to 12. Quite a spread, but that's the way it is in trading. You usually make the minimum expectations. It's really very difficult to hang around and get the maximum expectations, but that potential was there for you. So you're looking at 125 to 375 bucks off of 2 trades, and that's not a bad day of trading when all is said and done. So if you'd like to come and learn more about our trading methodologies, our setups, etc., our screens, our software, we offer you a 5-day free trial where you can come in and sit in on the gold trading room, the T-bond and E-mini trading room, and the T-note trading room. If you'd like more information on CN Futures trading, please go to our website, www.cnfuturestrading.com. At our site, you'll get an overview of the software, our educational materials and programs, and our trading methodologies. Please contact us via email at info@cnfuturestrading.com, or you may call us directly at 312-361-3895. Looking forward to seeing you in the room with your 5-day free trial of our services. In the meantime, good trading.